Our guest says that, sure, OPEC Plus is talking about big production increases, but some of those barrels are already on the market. Let's get more from Rebecca Babin, senior energy trader at CIBC Private Wealth. Rebecca, happy Friday. Thank you very much for joining us.
Hi, Andrew. Great to see you.
You've been looking into these production increases that have discouraged oil investors, and you say some of it is an illusion because those barrels are already being produced.
Yeah, so if you look at the OPEC producers, many of them are already producing above their quotas, right? If you look at the UAE, Iraq, Kazakhstan, and so when they increase their kind of unwinds and they increase the cuts that are coming off the market, it's just legitimizing essentially what some of these producers already have on the market. So I think when you look at the 410,000 barrels that were brought back at their last meeting at the beginning of the week, we think that you actually might only see about 200,000 of those barrels actually hit the market. And that's something the market has really started to rationalize, I think, as the week has gone on. Because when we think about actually how much demand is coming out of Saudi Arabia during the summer months, that sucks up some of the additional supply that they're supposed to be producing. And if we look at Russian production in particular, they actually produced in the month of May below their quota and even below where they were supposed to produce for their compensation cuts, which has brought into the question whether they could actually start increasing production, even if their quotas go higher. So I think what we need to really kind of look at going forward isn't maybe necessarily what they announce for their production cut unwinds in the future, but how many barrels are actually coming back to the market. And that's actually a backward looking data. So it's hard to kind of look forward. But I think when we see these disparity between, okay, we're going to bring back up 410,000 barrels, but only 200,000 hits the market, that's a really good sign that crude actually might be starting to work through some of the overhang and the spare capacity that has really capped the rallies for the past year.
You do say, though, it's murky right now, the future direction of oil prices with so many factors.
It's extremely murky. So, when we look at the number of moving targets that traders are trying to kind of get a line of sight on, we don't just have what OPEC is doing and how many barrels they're going to bring back. We have the factor of sanctions, what's happening with the Iranian negotiations. This week we saw, headlines that were bullish for crude in terms of the negotiations seem to have stalled a little bit and they didn't make forward progress. So, and then we had other headlines coming from Russia and Ukraine, which were also kind of bullish for the commodity, as Trump indicated that he might be willing to let them fight it out for a while and maybe not pushing towards peace quite as aggressively as he has. So sanctions is a huge factor. And then the elephant in the room is the kind of the tariffs and what's going to happen with global demand and global growth. Right now, we're kind of in a place where the market's comfortable with 800,000 barrels of demand growth for the year. And that's really incorporating a walk back of the extreme tariff regime we saw at the start of the year. But if we don't see progress with China in terms of negotiating a tariff proposal or getting into an agreement, we really could see those demand numbers come down again. And I think analysts have kept their pencils very sharp. So I think that the concern with how demand shakes out has kept the market very tentative in terms of getting long, particularly in the second half of the year. And that's why we haven't seen, any kind of substantial rallies. We are seeing a nice rally today. And I think that's indicative of the fact that there's so few people who are long the commodity. And when we get any kind of incremental positive news, there's a potential to see nice upside rallies because just to be brutally honest, sentiment's very weak and it's expected that things are going to get much worse for crude in the second half of the year.
That's interesting. So there isn't so there's enough negativity out there that some good news could send crude sharply higher?
Absolutely. And if you look at the way positioning is shaking out, everyone kind of recognizes that the market is in a nice equilibrium here. The expectation for the second half of the year is that we see builds of 1 million barrels a day. a surplus, right? And the positioning has been reflected in that through spreads, buying the kind of forward contract and selling a contract out in the future, expecting that the back end of the crude curve does collapse. That's where the trade is very crowded. So I think if we start to see any kind of relief coming in terms of demand for the second half of the year and tariffs don't end up being as bad as feared and growth ends up being okay, you could actually see a surprise rally just because positioning is so negative for that kind of second half of the year. And I couple that with, if we actually don't see any progress with Iran and we go into maximum pressure, that's going to happen in the second half of the year. And that's kind of been off the table now as these negotiations have played out. I see that as a risk. And I actually think, given where positioning is, I think there is a chance for a breakout. But I do think, just given the amount of headline risk, it's a tough trade, and you got to kind of be very nimble and tactical about it. But I do think with what I'm seeing out there and the way the market is kind of physically tight and the sentiment, there's an opportunity for crude to have a rebound. Keep in mind, we're down 7% for the year still in crude.
Rebecca, we'd better jump. Thank you very much. Have a great weekend.
Thank you.
Rebecca Babin, Senior Energy Trader at CIBC Private Wealth.